Hello, Ken St. Onge from Insurance Journal Magazine. I'm here at the National Association of Insurance Commissioners meeting in National Harbor, Maryland, and I'm sitting with Sean Dilweg, who's Wisconsin Insurance Commissioner. I'd like to begin by talking a little bit about the state of the property casualty insurance market in Wisconsin.
In Wisconsin, we have a very competitive market, one of the most competitive in the nation between housing and auto. And our major players are really American Family, State Farm, Allstate. You know, I always look to, I hate to say it, but we'll look to the Minnesota bridge collapse, and you pull really the companies that were involved with those autos there, and you hit 70% of the market with those three companies.
Give me a sense of the workers' comp market as well in the state. How does that look?
We really have one of the older progressive type workers' comp councils that works with our insurance department and also works with our workforce development department. We've had very stable rates. They've gone down. I think this year there was a slight uptick, but we have not faced a workers' comp problem in the state of Wisconsin.
What do you see as the factors that are making your market so stable in Wisconsin?
I believe it's the collaborative nature of our council. It's made up of labor, it's made up of insurers, it's made up of providers, and hospital providers, and it really works on the rates and works through the rates with our department and workforce development, and you can't deviate off of those rates. So it's something that we've had in place decades upon decades and have seen no reason to move off of that model.
Well, we're talking about stability. I want to talk a little bit about AIG. What's your take on the federal response to AIG, and do you think it was the right decision?
I don't think they had a choice. I look at how in the larger environments, the larger economic environment, how the credit rates were freezing up across all companies, be it GE, be it the auto companies, and if they would have not taken this action with AIG, which is such a large financial company, we were witnessing the freezing of available credit liquidity in the market. So I don't see where the feds had a choice on this matter.
Have you been in touch with any local insurers regarding solvency issues?
In the current market crisis, we've been dealing directly with our bond insurer, AMBEC, and our mortgage insurer, MGIC. And we've worked closely with how they've responded to the subprime market collapse. They have obvious ties into that collapse. But as far as other insurance companies, it goes back to really the strength of state regulation. These are, in the P&C world, these are strong companies. Since the savings and loan crisis of the late 70s, there's a lot of standards in place in every state that don't allow the investment in some of the risky capital that has been out there in the subprime market. So that really set the stage to protect insurers. And then you also have, for insurers, the backstop of the guarantee funds. So in the end, under our regulatory environment, you're not asking for federal money to bail out these companies. It's insurance money that bails out the companies.
How will the AIG bailout affect the debate over state regulation versus federal regulation?
I come at it, I've seen both sides in the media, that this is a signal that we should have federal regulation. But I think when we step back and look at why does AIG have any value left, it's because of the state regulation and the need for capital to pay claims. Just the idea that prior to the bailout, we could have still moved $20 billion to help AIG's liquidity on the financial side without damaging the policyholder and still protecting the policyholder shows how strong their insurance regulatory environment was. And then you turn to what was causing them the problem. I've looked at all of these banking instruments, the CDOs, the CDSs, as I work through a lot of the issues surrounding AMBEC. And these are instruments that were created under a very lax federal regulator. And they're the cause of a lot of our problems today. And so I see it as, the opposite of the pro-OFC people. I see it as this AIG situation is an argument for state-based regulation as it relates to insurance.
Why is that so important for your state, the state of Wisconsin?
With Wisconsin, we have a lot of mid-size P&C companies, and under optional federal charter or some type of federal environment, you're going to see a lot of the mid-size companies struggling. You would see more a nationalization of P&C, of life. I think life's been the strongest arguer in favor of this. But in the P&C world, that would be very problematic. You know, does Wisconsin want to get dragged into paying claims for Florida? You know, and that's an issue that we watch very closely. And under a federal regulator, you know, you worry about how companies would be pulled in different directions.
How would that affect insurance agents?
Agents would have a much less responsive agency to deal with. You know, just as we're on the ground every day for consumers in Wisconsin, we're also dealing with 120,000 registered agents in our state. And you know, that's something that we deal with very quickly and very effectively on any issues that come up before them.
Sean, a lot of companies have been floating the idea of a national catastrophe plan. I'm curious where you stand on the issue.
We have concerns about it. It goes back to my earlier comment that, you know, we don't want our policyholders in Wisconsin having to pay for the decisions of local governments allowing people to build on the coasts of Florida or Louisiana or, you know, eastern or western seaboard. So I think we're very concerned about the idea of a cat fund, pooling nationally for a cat fund, and continue really as a Midwest, all the Midwest states continue to push our concerns in relation to that, especially with our congressmen and senators.
Do you have any particular catastrophes that are most prone to Wisconsin?
We would have to be, tornadoes would be the most prone to tornado. You know, for us it's hail and tornadoes, and we've missed out on the record tornadoes this year that you've seen a little farther south. But you know, you have seen a trend this year. We're running 1,800 major tornadoes, where the last 4 years we had only 800 to 900, and that's, you know, that's an issue for a lot of companies.
So tornadoes are still a big issue in Wisconsin. How about
Right.
the hurricanes doesn't affect you so much?
Or wildfires in California, we just don't face those issues. So,
Sean, how would you characterize your department's relationship with insurance agents in the state?
we have you know, as I find that licensing an agent is very important. You're handing over authority via a license to an agent, and they need to live up to that license. We don't have a heavy hand about saying this is exactly how you do something. You have to take the education, maintain the education, and a license is a privilege. And so when we run into problems, obviously we look at that license and pull the license, but I do see a very collaborative relationship. As I set up a number of advisory councils on a number of issues, I always have agents at the table from the appropriate issue area, as well as the consumers and the companies. But licensing, I do see as handing over some authority to the agent as an individual, and I think it's important that they take that seriously.
Well, Sean, thanks so much for talking to us today. I really appreciate it.
All right.
Once again, we've been talking with Sean Dilweg, Wisconsin's Insurance Commissioner.